In this week's episode of the Stock Scores Market Minutes, I'm going to talk about the hazards of day trading. I'll then do my regular weekly market analysis. We'll look at a market scan in search of opportunity and look at the day trade of the week on GNPX. All right, so let's talk about the hazards of day trading. I've been doing this for about 30 years, and it has taken something of a toll on my body, maybe my eyes, my mind. One of the things that is a big issue is the fact that we stare into a screen all day, and that has given me really dry eyes over time. And so I wear these glasses. What they do is they block out the blue light. Don't I look pretty cool? I mean, they look like normal glasses, but there's actually, I don't know if you can tell here, there's a little bit of a blueness to them, and they knock or they take out the blue light. I've got all kinds of drops and stuff like that. The other issue is surrounding my knees, my back, the stress level that you have. And so for every one of these problems, there is a solution. Now, one of the things that I suffer from is knee problems. I have something called patellofemoral syndrome. Basically, when you sit all day, for me, it has started to bother my knees. So I get a special kind of massage called musculoskeletal massage. I probably pronounced that wrong. It hurts like heck, but it really works well. It's you have to actually really look to find someone that knows how to do this kind of massage, but it is excellent. In terms of my knees and back problems, most of those have gone away through that type of massage, but also doing weight training. Because we sit all day, some muscles just don't get used. And so I do a lot of work in a gym to strengthen my glutes, my hamstrings, mostly my legs really, but also my core. And since strengthening my core a few years ago, my back problems are gone. As long as I'm working out on my legs, my knees are pretty good, although they still have some problems. Now you might say, well, sitting all day, why don't you just get one of those stand-up desks? I have one. The desk behind me is a stand-up desk. However, the problem I find is that it's not so much whether I'm sitting or standing, it's the fact that there's not a lot of movement. You know, we're looking at our screens all day. And so whether I stand all day or sit all day, I still find that I get these pains in my knees. So I think one of the key things is just to move through the day. Now, whether you're sitting in a chair and you just get up every hour and do a little bit of movement, or if you stand and do some movement, that's what's important. And then, of course, there's the stress. You know, particularly when people start trading, they're very emotionally attached to their money, and that causes spikes in cortisol, and I think that's really bad for your health. And so over time, I have come to think about the market more as a video game. I try not to think about the money. I just think about it as playing a game where I know I have a plan, I'm trading my plan, I have a set of rules that I'm following, and I just don't really think about the money. And it actually keeps my stress level a lot lower. It's not to say that I don't have times when the cortisol spikes come, when the amygdala gets going, that sort of thing. But you really have to keep things in perspective and really just not let the fight or flight response take over. So all of the problems that come from day trading, the actual physical problems, all have solutions, and we just have to think about how to do that. All right, next up, let's get into the U.S. market analysis, starting us off with a chart of the S&P 500. And you can see that we continue in that upward trend. We talked about it last week, having broken the pullback, and we've been moving up ever since. Nice upward trend there, starting to fade a little bit, but that's pretty typical. We hit resistance, we broke through it, and now we're sort of trying to move back up. Generally speaking, the market looks pretty solid, but if these upward trend lines start to break, I would sort of draw it like this. This is our upward sloping channel. If we were to break down through that from a falling top, we could see some short-term weakness. Looking at the long-term weekly chart, hey, it's we had that little 2.5-week blip to the downside around the coronavirus, but the upward trend line was never broken. We remain in a bullish trend, and as much as it may not make sense, it is what it is. Don't doubt it until the trend is broken. Looking at the Russell 2000, which is our U.S. small caps, we've had a little bit of a revival the last couple of weeks as well. It is still under those all-time highs, and I expect we'll get to that level, but get stuck at that level. And so I'm less optimistic about the small cap stocks. They really haven't kept pace with the large caps, but I'm starting to see little pockets of strength in that area, and we'll see if they can continue to give us some opportunity. On to the Canadian markets, and we have here the chart of the the TSX 60, and you can see we are in an upward trend, upward sloping channel. So short-term bullish, long-term, much like the US market in that upward trend. We are running away from the trend line to the upside. We're at the top of the channel, and typically when that happens, you're getting a little parabolic, due for a pullback. No sign of a pullback yet, but we are due for one, and we may see one soon. Looking at the TSX Venture, you can see the downward trend was broken back here. We're starting to build some rising bottoms, but really no sign of life yet. Little bit of volume pickup, but I don't think there's a whole lot going on here. I'd like to see this market break out through that 590 level with some volume, and if so, we may get a revival of those microcap stocks in Canada. Looking at currencies, the US dollar has continued to bounce back. It's actually just getting through the pullback line this week. Wouldn't say it did it with a lot of enthusiasm, but it's encouraging that it has been able to break that. Now, I would like to see a rising bottom first, and so probably we'll get a pullback, maybe a pullback, build a rising bottom, and then start to cruise back to the highs. But it certainly doesn't look as negative as it did a couple of months ago when the upward trend line was broken. Canadian dollar has been selling off with oil, and like oil, which we'll see in a moment, it has bounced this week off of support. I talked about that last week, how that was likely to happen, and we'll now see if we move back up to the highs, and if so, I think it will be because oil bounces back. We'll look at the oil chart, as I said, in a moment. Looking at interest rates, pretty quiet this week. The bond market was stuck in a sideways, very narrow range, and so interest rates are relatively low and not a lot of volatility there. On to the commodities, and you can see gold is still in that long-term upward trend. It tends to do better when there's turmoil, and I think there's a lot of people concerned that the market valuations make no sense, so they're looking for some safety in gold, and I think it's a good thing to hold. I don't know that I'd be a strong buyer of it here, but individual gold stocks, if they are showing good patterns, then they're worth considering, but I would generally say I'm more neutral than bullish on gold. Oil, as I said, has pulled back for 4 or 5 weeks. It came down to support. We talked about this last week, and it bounced off of it as it has a number of times. We have still not really broken the pullback, the weakness, and so there's work to be done here, but at least it's that first sign of stability. On to the fear chart, you can see that fear has kind of come back down to where it was, and so there's not a lot of fear in the market, and that's always a bit of a concern for me because it means that investors are complacent, but we don't worry about that until the upward trend line is broken. So my outlook then, bullish on both time frames for US and Canadian stocks. Gold, long-term bullish, short-term neutral, and oil, long-term neutral, short-term bearish, although at least it is bouncing. We may see it start to make a recovery. Markets continue to move higher, and it's really easy to argue that the move is irrational. I get lots of comments from people saying, oh, this makes no sense, the world is going to implode and blah, blah, blah. You know what? That doesn't matter. Until the trend line is broken, you got to stick with the trend. I have seen bull markets that make no sense before. I think about the bull market that we had in 1999 and into 2000, and you trade with the trend. Now, yes, in March of 2000, it broke the upward trend line and we had a major correction, but that hasn't happened yet. And so until we break the upward trend line, you just got to remain optimistic. Gold is worth trading if there is a breakdown, but generally speaking, it's going to be pretty quiet. Oil is bottoming, which is good, but that doesn't mean it's going up. And so therefore be careful with the oil and the oil stocks. And fear is relatively low again. All right, so let's get into the StockScores market scan for this week. Of course, on StockScores.com, we have a market scan tool available to our members. And if you go into the products and services menu in StockScores or the trader training menu, you can learn more about the courses I offer and the tools and that sort of thing. It's all there. The market scan tool allows us to search through the entire market or North American market anyway, in just seconds. It's a very powerful tool, and it really helps us to find those stocks behaving abnormally, which is the primary thing that I look for. So let's jump over to the market scan tool now. And this week we're going to run something called the action break scan, action candle breaks. Now, the action candle breaks is a strategy for finding stocks that may be reversing long-term downward trends. And I'd like to run this on a daily basis. It focuses in on the daily charts. When I see a daily chart that I think has some promise, then I will zoom out to a 3-year weekly chart. And so what I'm looking for when I go through these charts here is I'm looking for some kind of a break of a downward trend line from maybe a double bottom or a rising bottom with some volume. And we can see it here. The HEXO is breaking the downward trend line. So there's the downward trend line. And it's just tickling through that, and we've got some really strong volume. Now, we've seen a few instances of attempts at recovery by the cannabis stocks. This is, of course, a cannabis stock. This stock has made kind of a double bottom, so that's encouraging. I would say it's very speculative at this point. It's an aggressive buy to try and call the bottom on this one. But if you believe that these cannabis stocks are oversold, this one looks like it maybe has a potential to turn around. Now, HEXO is listed on the US market, but also on the Canadian market, and the difference in price reflects the currency exchange. We'll go through a few more here. This one, Research Frontiers, I don't know for sure, but I'm guessing it is a cannabis stock as well. And here you can see the price break to the upside. Not great volume. I'd like to see volume be a little bit higher, but it is breaking that little downward trend line from a rising bottom. We call that a pennant pattern. It's a decent turnaround signal. I'd give this one probably a 6 out of 10 if I was to rate it out of 10. And when I say 6 out of 10, I mean I think it has a 60% chance of moving higher. On the HEXO, I'd probably give it a little bit better, maybe a 65% chance. Here you can see another cannabis name, Village Farms. However, this one is still beneath its downward trend line. And so to pick this one up here is, again, pretty aggressive. But if you like this stock, maybe there is an opportunity there for a bounce back from an oversold condition. OPNT, similar situation. Downward trend line has been broken. Kind of a double bottom, not a real strong one. Volume good, but not great. Liquidity is very light. You can see it only traded 87 times. So it's a very illiquid stock. I'd probably leave that one alone, but it is showing the kind of pattern that I think is pretty good. Here's Canopy Growth, and of course T.WEED, T.Weed on the Canadian market is the same company. This is a stock that I actually featured back here. When it broke, it pulled back to support and has bounced off of support. Therefore, still healthy. I still think it has the potential to move higher in the weeks and months ahead. All right, well, let's get into the day trade of the week. And this is really for educational purposes, just to highlight my day trading strategy, which is applied each day in my active live service. And again, if you go to the Stock Scores website, you can learn a little bit more about active live. Essentially, you're watching my algorithm run throughout the day. It watches the entire US stock market for stocks triggering my entry signal, which is something called an action candle. It's the little pink dot on this chart. This is a 2-minute chart of GNPX, which was one of the hot stocks on Friday, and it triggered at 9:32. For every $100 of risk, required a position of 660 shares. You can see the 660 there. It's all algorithmically driven. The computer calculates all these things, and we just watch the signals come in. It required $2,178 position, but with margin, you would only need $726 worth of capital. It ultimately ended the day at a 7RR, which means a $700 profit for every $100 of risk. During the day, it was actually as much as $1,600 on this trade because it went up very sharply and quickly. But if we just use that end of day number, that is a 96% return for a 1-day hold. Well, that has been the Stock Scores Market Minutes for February 17th, 2020. Hope that you've had a great week in the market. Please click on the subscribe button, hit the alarm button for email updates when I upload a new video. Hope that you've enjoyed the video. If so, click on the like button, and most importantly, trade well.